Hey everyone, welcome back to Corporate Decoder. Today, First Trust Series Fund just filed its semi-annual report, and I am seeing some interesting trends in their portfolio performance. Quick note, this is not financial advice, just my take on public filings for educational purposes. In these reports, we get a snapshot of what these funds actually own and how they are doing. Let's dive into the numbers. First off, this filing is from the First Trust Series Fund, and it covers their semi-annual report for the period ending the 30th of April 2026. This means we are looking at how their investments performed over the first half of their fiscal year, which began back in November 2025. We are going to really focus on the First Trust Short Duration High Income Fund today. They've broken down their investments and performance for us, and it gives us a great look at where their money is. Looking at the key fund statistics for the First Trust Short Duration High Income Fund class, as shares as of the 30th of April 2026, the fund net assets were just over $55.5 million. This tells us the total value of all the money invested in this specific class of shares. Now let's get into what the fund actually invested in. This is the heart of the report. Remember, this is like looking at a company's shopping list for investments. The biggest chunk of their investments, a whopping 57.5%, is in corporate bonds and notes. This means they are lending money to companies, and in return, those companies promise to pay them back with interest. Think of it like being a bank, but for publicly traded companies. Within corporate bonds, they have about 0.7% invested in advertising companies. For example, they hold bonds from Clear Channel Outdoor Holdings Inc., with stated coupon rates ranging from 7.13% to 7.75%. They also have 1.3% in aerospace and defense companies. This includes bonds from Transdig Inc., with coupon rates like 6.38%. A larger slice, 3.3%, is in cable and satellite companies. They hold bonds from Dish Network Corp with a high coupon of 11.75% and EchoStar Corp at 10.75%. These high rates suggest these might be seen as a bit riskier, but offer potentially higher rewards. When we look at the statement of assets and liabilities for the fund, the investments at value are listed as $55,745,309. That is the total market value of everything they own. Next up is senior floating. Rate loan interests making up 27.2% of the fund. These are basically loans made to companies that are usually floating rate, meaning the interest paid can change over time based on market conditions, often tied to something like SOFR, which is the secured overnight financing rate. In this category, they have 2.8% in application software companies. For instance, they have loans with ConnectWise LLC with rates like 7.46%, and CureClick Technologies at rates around 6.95%. A significant 3.3% is in insurance brokers. This includes loans to Acrisure LLC with rates around 6.75% and CRC Insurance Group at 8.45%. Moving on, 8.0% of the fund is in foreign corporate bonds and notes. This means they are lending to companies outside the United States. Within foreign bonds, 2.8% is in insurance brokers. They hold bonds from companies like Ardona Group Finance Ltd with rates from 7.75% to 8.88%. That is a pretty healthy interest rate, likely reflecting some risk involved with these international companies. They also have 7.6% in money market funds. These are typically very safe investments, often seen as a place to park cash temporarily, offering a low but stable return. The value here is $4,219,818. Interestingly, they have a small negative allocation of 0.3% in net other assets and liabilities. This usually accounts for things like accrued expenses or other minor adjustments that are not directly investments. It's quite small, so it doesn't really impact the overall picture much. So if you add up all the investments listed, it comes to 100.3% of the total. This slight overlap happens sometimes due to how assets are classified or how slight market movements affect values right after the reporting date. And at the end of it all, the net assets of the fund are $55,587,337. This is the final value after subtracting all liabilities. Now let's switch gears to the statement of operations for the Short Duration High Income Fund. Looking at the financial highlights for class of shares, the net investment income is 0.52 per S-share for the 6 months ending the 30th of April 2026. This is the income generated from the fund's investments after accounting for all operating expenses. The ratio of net expenses to average net assets is 1.25%. This tells us how much it costs to run the fund as a percentage of the money invested. For Class A shares, this is pretty standard. The total return for Class A shares over this 6-month period was 0.99%. This measures the overall performance of the investment, including income and changes in the value of the investments themselves. Keep in mind this is for a 6-month period, not annualized yet. Looking at the Class C shares for the same fund, the numbers tell a similar story but with slightly higher costs, which is typical for Class C shares due to their different fee structure, often involving a deferred sales charge or higher ongoing fees. The net expense ratio here is 2.00%, reflecting that higher cost to the investor. The total return is also a bit lower at 0.67%. Let's now look at a different fund. The First Trust Managed Municipal Fund. This fund focuses on municipal bonds, which means their investments are typically from state and local governments, and the income generated is often tax exempt at the federal level. For the class of shares of this fund, the net assets are around $54.5 million. The total number of portfolio holdings is 104, which is less than the short duration high income fund, suggesting potentially more concentrated holdings. As expected, 97.1% of this fund is invested in municipal bonds. The rest is in net other assets and liabilities. California is their biggest state allocation at 8.0%. This includes bonds for things like the Car-State MuniFin Auth for charter schools and the City and County of San Francisco Airport Revenue Bonds. Florida comes in with 8.8% with investments in projects like the Beach Community Development District Capital Improvement Revenue Refunding and the J Florida Electric System Revenue Bonds. Looking at the statement of assets and liabilities, the investments at value are listed as $52,931,594. This is the total market value of their municipal bond holdings. For class of shares of this managed municipal fund, the net expenses ratio is 0.90%. This is considerably lower than the short duration high income fund, which makes sense given the nature of municipal bonds and their typical fee structures. The total return for class of shares over the 6-month period was 1.55%. This is a decent return, especially considering the tax advantages these bonds typically offer. Finally, let's check out the First Trust Preferred Securities and Income Fund. This fund invests in preferred securities, which are a bit of a hybrid between stocks and bonds and other similar income generating investments. This is a much larger fund with net assets at over $207 million. The number of portfolio holdings is 215. Their top 10 holdings show a heavy concentration in banks and utilities. For example, Bank of America Corp. Preferred stock is listed with a rate of 6.63%, making up 2.6% of the fund. Wells Fargo and Company Series L is also there at 7.50%, making up 2.1%. The largest portion, a massive 75.3%, is in capital preferred securities. This is where most of their investment activity is concentrated. Within capital preferred securities, banks make up a huge 42.4% of the fund. This includes a wide range of preferred stocks from major banks like Banco Bilbao Vizcaya Argentaria S.A., with rates from 7.13% up to 9.38%. They also have significant holdings in Bank of America Corp., Wells Fargo and Company, and others. Insurance companies also represent a notable 7.1% of their capital preferred securities. This includes holdings in companies like Aegon Funding Co. LLC at 5.10% and Hartford Insurance Group Inc. at 6.04%. Looking at the statement of operations, the total investment income for the 6 months was over $7 million. That is a good chunk of income, mainly from interest and dividends. For class of shares of this fund, the net expense ratio is 1.41%. This is higher than the other two funds we looked at, which is often the case with preferred stock funds due to their more complex investment strategies and the nature of preferred securities. The total return for class of shares over this 6-month period was 1.34%. Again, this is for a 6-month period and doesn't include sales charges or taxes. Overall, these reports show a diverse range of investments across different funds. The short duration high income fund is heavily weighted towards corporate bonds and loans, as you'd expect. While the managed municipal fund stays true to its name with a strong focus on municipal bonds, the preferred securities and income fund is heavily invested in preferred stocks, particularly from the banking sector, which explains its higher net expense ratio but also potentially higher income generation. What I am watching for all these funds is how they navigate market changes, especially with interest rates and credit quality, which are always key factors for fixed income and preferred stock investments. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this helpful, smash that like button and subscribe for more insights. Check out the Discord linked below.